Hello, my name's Steve Bigelow with the Candlestick Forum. Let's take a look at which sectors look the best for this coming week. As we saw, the markets held up pretty well this week. Didn't move anywhere, but you can see the Dow is still trading up above the T-line. Still tells us we're in an uptrend. Same scenario on the NASDAQ. You can see how the NASDAQ not only stayed up above the T-line, but stayed above the 200-day moving average and well above the 50-day moving average. Also a good implication that the bulls are still in control of this market. This week, we're looking still at the biotechs. They're still acting very strong, and computer-related stocks. IMU is an example of where they've come out of a slow curve, gap up. This is what we call the message. Message was that it opened, but traded off. That might not look good. However, the message was they gapped us up. Now the profit taking is over. Look for more upside. CVM also came out of a little buy signal gap up through the resistance level. This slow curve indicates there's probably going to be more upside. And we're still in INO. Ever since it broke out through this wedge, it's been acting very strong. Look for more upside until you see a sell signal. Now, the computer-related stocks were starting to act strong. Apple being the primary one, you can see how it did a little bullish flutter kicker type signal back up through the 50-day moving average, giving you kind of a J-hook pattern. This would imply wave 1, wave 3 is in progress. Also, ICAD. Look at the slow curve, fry pan bottom. Most significantly, you note how the they couldn't close it back below the T line. Be ready to buy this one on positive trading with the expectation of much more upside. And TDC, another little slow curve, J-hook pattern with a bullish flutter kicker, possibly making the 200-day moving average your next likely target. So there's been strong sectors that are still continuing to work. The ones that we recommended last week, the health services, medical instruments, and the oil and gas refineries are still working well. You might take a look at Chesapeake. Look at the scoop. Scoop is identified by this flat handle, then the pullback, and then the scoop. Usually you have a slingshot effect to the upside. The oils are still being bought, even though crude oil prices are down at lows of decades. And the healthcare stocks are still working. Continue to hold these. And the oil and gas pipelines. Last week we saw this fry pan bottom setting up in PAA. That fry pan bottom is still working, still making the 50-day moving average your likely target. That'll be it. There's still other sectors that are working well. The food and beverage, the telecommunications, and some of the specialty retail are working well. With that, everybody have a good week. We'll see you in the chat rooms.